Welcome members to another weekly update. Please see the other video first as always for the big picture regarding what the overall market is doing and take everything here within that context. Let's start right away with the yen trade. Got FXY up here, got the weekly chart here, and sort of just play around with some lines here, and we can see this downwards trend line, this channel on the weekly chart, which is the chart I'm looking at, to be fair with this, that it's in. So, you know, I pay more attention to that than the moving averages usually. The moving averages are a guide, especially on the direction of things. But what I think I can see here is actually quite a clear weekly channel that's kind of emerged now, and it's hopefully just bouncing around, you know, within that. And we saw that on this week. It's pushing up there, and then it just turned around again, had another go up, and then coming down again. This one's still on track. I mean, I was in around here, and I said I was going to put a 5% stop. All of this, that puts me up sort of around there. It tried to have a go this week, but it's turned around again, and it's determined to give me a run for my money, this one. But, you know, it reminds me of, you know, something else, you know, I've learned over the years and often try to remember, you know, trading, is that, you know, it's not a nice thing, I know, but, you know, your trades should make you feel somewhat uncomfortable. That's not to say you've taken a silly risk, but, you know, it's very rare that, because it just wants to test your patience. That's just the way it goes, you know. And so, you know, I've learned to that feeling of discomfort to actually, you know, pay attention to it, but not be scared off by it. So let's watch that channel then. I'm still in that one, as explained. What else have we got here? Yeah, I had a couple that I got into last week. One went up and the other went down. Let's look at MXL, which they both had good entry points, and I said I was only getting with half of my usual position that I would do, because I'm getting increasingly, you know, a bit nervous as we go into these months. I'm seeing more evidence of money being poured out. Yeah, so I was in MXL around there, I think, and then it just closed below it. So nothing major loss on there, especially with the half a position. But the other one, so that, and this is a good point that's been proved here. So that one I was pushed out of it with only a tiny loss, but I'm in with this one, the new trade, and this one went straight up ever since. So if the other one is giving me like a small loss, hopefully this one will turn into a decent gain. And as long as the winners outweigh the losers, then all is well. You know, and it's unrealistic to think that everything is going to go your way every single time right from the start. You know, you're playing the odds here. You know that when I lose small. When I win bigger. So those ones are in. AXS is still running. Let's look at, I closed out Caterpillar last week, and you can see that that's just chugging along there fine, but that was a very good profit, and I wasn't going to leave that on the table. The other one was, let's look at Tile. Yeah, so this one is really close, right, getting close now to its, it bounced just off of there, the 200-day, 40-week. That's still not a bad entry point, actually, if I was to go back in the trade. Let's look at that on the weekly chart. You can see that there. It's got a rising moving average, and it's just touching it, hopefully about to just like bounce off it. That's not a bad entry point at all, and it just bounced off, went the right direction on Friday. TTPH, I'm out of that now. I would have, for a small profit, as you know, I was in down here just as it peaked up above the 40-week, and waited for it to go sideways. The early warning sign, as I said, was, well, back up here. We had this support line form, and it did break below it. But I said I'm just going to try and, you know, hold on to this. My exit point, as always with this kind of trade, is if I'm in when it gets above the 200-day, I'll be out when it gets below the 200-day. And in this instance, it was out there, small profit in around there, just like 100 points. But, you know, worth it, because the upside on this one could have been huge. And as you can see, that's where we're playing this game. Look at all the upside that was there. And listen, if it gets back above the 200-day, I'll look at getting back in. So small profit on that one. MGPI was another one I took profits on last week. and it's always interesting to look in the rear view mirror with hindsight. Did you do the right thing or not? Here's where I said to get out. As soon as I said that, the whole thing started going south and then going back up, down, and these huge intraday ranges here are usually a sign of trouble, you know, that sort of uncertainty and volatility. So pleased to be out that one. What else do we have here? I think I'm not going to add any new trades this week for reasons already discussed. Other points of interest, I can have a look around. Let's look at gold, because people are interested in gold. And I don't know, is some kind of trend emerging here? I mean, it's a bit like the yen, and that is something that I mentioned last week. The yen's counterattack is not about yen strength, it's about dollar weakness. And when the dollar is weak, gold gets strong, and vice versa, which is why in this instance gold is simply mirroring the yen. You know, everything's pegged to the dollar, and you know, we've just basically see the same chart here. You know, gold's pushed into a downtrend just like the yen is. Only the thing is there'll be a disconnect at some point, because gold isn't linked to the yen, you know, and it's not necessarily linked to the dollar. The yen has its own domestic issues that will, the government itself wants the yen to go down. So, but there it is. That's what's been going on, which has been frustrating that trade. So you can see that. Bonds, TLT, don't like how this is a 40-week chart. This is obviously the opposite to stocks. This is a safety trade. It's a bigger, more sophisticated market. If the bond market starts getting, positive, that could be a bad sign for stocks. And it is definitely starting to pull out of the doldrums. So that could be a sign of something. What I see constantly is the chart of the retail sector. That's how the retail sector looks. Pretty diabolical. And this is the real economy. You know, so if people aren't spending money, I don't really see how it's supposed to be a booming, big boom, and which is why it doesn't feel like one. So that's all for now. It's a sleepy sort of time now, really, until September starts again. So see if we can see anything in this week. Hopefully looking for some more kind of commodity or currency plays. I'll be looking at that. Does stocks start to get a bit odd? But I'll speak to you next week.